The Honest Company is a consumer goods business founded by the actress Jessica Alba. They sell baby, beauty, and household products that are safe and free of health-compromising chemicals. After hitting its 52-week high of $23 a share, it has since traded down to around $5. In this video, we'll discuss whether or not Honest is a good buy at these prices. In this market, there are a lot of stocks that are down 60, 70, or even 80+%, but a lot of these businesses are ones with years and years of growth priced in. Even after valuations have come down, many investors are looking to put their money in safe havens, such as companies like Proctor and Gamble, Kimberly Clark, Johnson & Johnson, and others like this. However, the Kimberly Clarks of the world are unbelievably boring, so there has got to be a better way to do this. The Honest Company is also a needs-based business, just like the companies I mentioned a moment ago. However, the Honest Company has years of moderate to impressive growth ahead, with the potential to provide impressive returns. The only Honest presentation that I could find online was their IPO slide, so that's what we're taking a look at here today. On this first slide, you can see the executive team and the founder, Jessica Alba. Here are a couple phrases that describe Honest. I would agree they are a mission-driven brand. I think that all companies ultimately try to disrupt, so maybe it's a bit overused, but if Honest is successful, then they would be a disruptor, and I also would agree that they do have some growth potential. This slide shows some miscellaneous metrics, some of which are a bit out of date, but the one I'd point you to is this Net Promoter Score. When I was looking into Honest in more depth, I watched a ton of YouTube videos, read reviews on Amazon, their website, and overall they are very positive. Honest is big into making products that are free of harmful chemicals, and they do not want people to have to compromise on the effectiveness of these products. Here we see a bit of a breakdown in their revenue between their household, personal care and beauty, and their diapers and wipes sections. Diapers and wipes make up the largest portion of their revenue, and when I was looking online, it seems that especially their diapers are incredibly good. People have great reviews of their diapers. I watched a bunch of these reviews on YouTube in preparation for this video, and I was impressed that person after person seemed to think that Honest diapers perform better than Pampers and a lot of the other brands out there. Another great thing with this company is they use modern marketing. Of course, Jessica Alba has incredible reach on social media, and they also have a lot of followers on their Honest Company pages as well. With a young company like Honest, you want to see this strong revenue growth, which we do see here. It's important to keep your expectations in check though. Don't expect to see 30% revenue growth. That's not what is taking place here with Honest, but hopefully we can see 8 to 15% revenue growth over the next several years. The Honest Company does give us some rough long-term guidance. They'd like to see revenue growth kind of in line with their industry. And I think it's totally reasonable to expect them to have years of 10 to 15% growth. Currently, they're sitting around a 35.9 gross profit margin, and they'd like to see 45% plus in the future. And to give you some context around that guidance, we can see that a mature company like Proctor and Gamble has gross margins between about 48 and 51%. On the other hand, Kimberly Clark comes in between about 32 and 36%. It's important to keep all of these numbers in mind when we begin to estimate Honest's future profitability. I've got the income statement pulled up here for Honest, and as we can see from 2019 to 20, they had 27.6% revenue growth. Analysts are expecting 7.4% growth for the current year and 13.6% for 2022. Honest's earnings will be coming out here in the next couple weeks, so we'll have to stay tuned for that. Back on the income statement here, we can see they pulled in revenues of $300 million in 2020 with gross margins of 35.9% and a total net loss of $14.47 million. Now this isn't too terribly bad, especially considering the fact that they had stock-based compensation in here as well as other expenses associated with being a newer public company. Now on the balance sheet, and I'm going to use the last 12 months here, they've got total cash in short-term investments of $90 million. And let's compare this to their total current liabilities of only $49 million and total liabilities of $94 million. Now over on the cash flow statement, we can see that Honest had in 2020 about $8 million in stock-based compensation, and over the past 12 months about $15 million. Then if we scroll down a bit further, we can see they repaid a little bit of debt, did not issue any new debt, and only issued a tiny amount of common stock, so not too much dilution here. Because they are still a money-losing company, it is possible that they may need to issue additional shares or add some debt in order to raise money, but hopefully if Honest is able to reach profitability here in 2022 or 2023, we shouldn't see too much dilution or any other negative effects due to unprofitability. Back on the income statement here, I want to make one more comment on valuation. Let's say Honest is able to continue their revenue growth, and here in the next couple years, they're able to generate about $400 million of net income. If this were the case, let's estimate how profitable Honest could be. A company like Proctor and Gamble gets about 15 to 18% of its total revenue to the bottom line. Kimberly Clark, whose margins were a bit worse, is still able to get about 8 to 12% of their revenue to the bottom line. Now, of course, Honest is a different company, but if they're able to achieve margins similar to Procter and Gamble, a net income margin of 15% would be reasonable. If this were the case, off of $400 million, Honest would be bringing in $60 million of net income. At Honest's current valuation, this would put the price to earnings ratio around 7. Now, of course, Honest isn't going to turn on the profitability because they're still trying to grow, but this gives you a rough idea of where the valuation is right now. I do think that Honest is attractively priced here around $5.50, and certainly if it went below $5, it would be a good buy. That being said, if we see a spike in the share price and Honest somehow gets above 7 or 8, anything above that, I don't know if Honest provides quite the value that we see here. If you're looking to add a company to your portfolio that has a good chance of succeeding, whether we're in a recession or not, and has the ability to generate impressive returns, Honest Company might be the one for you. They are a needs-based business. That being said, as I've discussed in this video, many of their products sell at a slight premium to competitors in the market, so when tough economic times do show up, luxury goods are the first ones for people to get rid of. But again, it is a needs-based business, so I think a lot of the people who like their products will still choose to buy them even if there is a recession. It remains to be seen exactly what will happen, but that is my opinion. With that said, guys, if you made it this far in the video, thank you so much for watching. Don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.